All right, well, we are moving into chapter 4. So we are dealing with overhead costs and allocating overhead costs, and furthermore going into activity-based costing. So again, if you are out on Canvas, you should be able to click that chapter 4 practice link. And we will hopefully get through all of these. They're kind of lengthy as far as the calculations go. So we'll hopefully get through as much of it as we can. Some of it's kind of repetitive, so I think you'll be okay. Okay. So the first one's just dealing with using applied overhead, which is what we did in managerial accounting. If you remember, we looked at and we said, you know, our overhead costs we estimate for the period, so we can calculate a total unit cost. Because we know our total unit cost is like direct materials plus direct labor plus any manufacturing overhead. So overhead costs, you know, could be factory rent, depreciation, salary, you know, like indirect salaries, indirect materials. All of those things are overhead costs. Well, in a typical, what we learned in managerial is we calculated a predetermined overhead rate, generally based on direct labor hours. So we would take our estimated overhead divided by our estimated direct labor hours and get a predetermined overhead rate, which is what we're going to do here. So to apply overhead to a product, we would just take however many direct labor hours it used times that predetermined rate, which is great, works fine. But what happens is, we're going to use it for this example to kind of show you, and we'll use it on some others to compare and contrast. If we have products that go through lots of different activities, or there's just other cost drivers besides labor hours, you know, when we find that labor hours doesn't always drive like the overhead costs, sometimes using that applied overhead makes it inaccurate. So because if you remember in managerial, we would apply overhead and we would calculate product costs based on that applied overhead. That applied overhead would get debited to work in process. Well, at the end of the month, we would compare. You would look at what the actual overhead charges were and compare them to the applied. And then we would have to calculate over or under applied. Well, if we did one product, you know, one or two products, and they were very labor intensive and it was kind of similar machinery, that approach works just fine. But as we get into products that vary in different activity stages, that may not, direct labor hours just may not be the same. So we're going to look at that when we get into activity-based costing, but I just wanted to get that in your head as we go through. So this first one is just actually looking at applied overhead and calculating unit overhead cost, just using a typical applied overhead rate, just to kind of refresh our memories, okay? So Seiko produces two types of dryers, deluxe and regular. They use a plant-wide rate based on direct labor hours to assign overhead costs. So it gives us estimated overhead for the year is $2 million. Expected activity is 50,000. That's the direct labor. And then the actual direct labor hours and the actual units produced for both the deluxe and the regular. So if we're kind of doing the same thing we did in managerial, that's what this first one is doing. So it says calculate the predetermined plant-wide overhead rate using direct labor hours. Well, to calculate a predetermined overhead rate, you always just take your estimated overhead divided by your estimated activity. Okay. So on that one, I'm truly going to take my estimated overhead of $2 million. Oops, got to add more zeros there. And divide it by the estimated activity, the 50,000 labor hours. Okay. So that first one's pretty easy. So what's my per hour overhead rate? 40, okay. Just a little bigger. Okay. So if we were to apply overhead based on direct labor hours, we would apply $40 per direct labor hour used for each product. So to apply overhead on this next part, we are truly just taking that predetermined overhead rate times the actual activity. Okay, so that's pretty easy too. So for deluxe, we're truly taking the $40 per hour times 10,000 hours. So in this case, for deluxe, we would apply what, 400,000? $400,000 of overhead to the dryer. Okay, and again, that applied overhead would be debited to the work in process inventory. For regular, it would be 40,000 times 40, which is what? 1,600,000?
Yeah.
Okay. So predetermined overhead rates and applying overhead, again, not too bad. Pretty easy. Well, on number 2, it just wants us to calculate the overhead cost per unit. So just the overhead cost. Well, I got rid of the total units there. We produce 20,000 deluxe dryers. So what's my overhead cost per unit for the deluxe? 20, yeah. We just take our 400,000 divided by our 20,000 units. So 400,000 total overhead divided by 20,000 units. Our overhead cost per unit is $20. And then we do the same for regular, 1.6 million divided by 200,000 units. So what's the regular overhead cost per unit? 8, very good. So from there, we could calculate total product cost, unit cost, because we would have prime cost, which is materials and labor, plus overhead. They didn't give us that, but if they gave it to us, we could. I guess I should clarify that, right? And then on this first one, the only other thing it has is the what if. What if the deluxe product used 20,000 hours to produce those 20,000 units instead of 10,000 hours? Well, what would our overhead cost be if it used 20,000 of direct hours instead of the 10,000? 800,000. Yeah, it would be 20,000 times $40 per hour. So our overhead cost would double. So what would happen to our profit? It would decrease. Very good. And by how much?
400,000.
By 400,000. That difference, the 10,000 extra hours of overhead. Any questions on that one? So again, that's kind of a review of managerial, how we applied overhead. So you can check that one. We'll move on to the second one. The second one's looking at variances. So like I was saying earlier, we have the applied overhead like we just calculated, but then at the end of the month or period, we're going to have an actual overhead, where we keep tally in our overhead control account of our actual overhead. And kind of how that works. Whenever we apply overhead, we always debit the work in process. We calculate the applied overhead, we debit that into work in process as a product cost. It gets credited to an overhead control account. Or in managerial, I think it was just called like manufacturing overhead. It's the same idea, just a control account. So applied overhead, when we figure out, in this case, they're applying it to different processes. It's all going into inventory accounts. Applied overhead got debited into work in process, finished goods, cost of goods sold. So that applied overhead of 500,000 gets credited to overhead control. The actual overhead gets debited. So as we go through the month, all those actual overhead accounts, actual overhead amounts get debited into actual. So when we look at it like this, if this is actual, actual is always on the left. Applied is always on the right. So did we over or under apply overhead? Over. Okay. Our applied is more than our actual. Okay. So we actually over applied overhead. Okay. So in this case, what we calculated at the beginning, we were off, which is, again, it's an estimate, so it happens, especially when it's just reliant upon direct labor hours. So this first one was calculating the overhead variance for the year. You're just taking the difference between applied and actual. Okay, so what? That's 30,000, and like you said, it's over applied. Okay, so when applied is greater than actual, we have over applied overhead. Well, basically what that means is we overcharged our customers. Oops. Our bad. So at the end, when we calculate this variance, that over or under applied always goes as an adjustment to cost of goods sold. Well, in this case, we over applied. So it's actually going to be, it's going to offset cost of goods sold. Because we know cost of goods sold is basically an expense account, and it increases on the debit side. So when it's over applied, we're going to credit it to cost of goods sold because it's reducing our cost of goods sold because we charged our customers more of our expenses. Kind of works out, right? So we debit our overhead control and we credit cost of goods sold. And the other way you can look at this is this account needs to be zeroed out. So to zero it out, if I put the 30,000 on the left and put that to cost of goods sold, this account zeroes out. Okay. We want at the end of the period our overhead control to be zero to start over. It's a temporary. So when we over apply it, it gets debited to overhead control and credited to cost of goods sold. So it's kind of like we made more money, honestly, because we overcharged our customers. Now on number 2, what we're assuming here is that the variance that we calculated, that 30,000, is material. Meaning it's actually kind of a big enough amount that we need to adjust our accounts. So we don't want to just charge it all to cost of goods sold. We want to charge it back to work in process and finished goods. Okay. So in that case, you just have to prorate that 30,000 among the 3 inventory accounts. Okay. So overhead control still gets debited for the 30,000. Okay. But then we're going to go up here and use the applied overhead. So the overhead was applied to work in process, 100,000 of it, and then 200,000 with the finished goods and 200 to cost of goods sold. So we're going to use this stuff to prorate that 30,000. So basically what you have to do is you take work in process at 100,000 divided by the total 500,000 to get like a prorate or percentage, okay, which is like 1/5, okay, or 20%. Okay. So we would take each of them separately. And do like work in process, again, would be like 1/5 of 30,000. And then your finished goods would be 2/5 or 40%. And same with cost of goods sold. That one was just an easy easy percentage one. Okay. So what, that would be 6,000 here and 12,000 in the other two. I know that's kind of going off the screen there. So instead of crediting all of that to cost of goods sold, because we applied overhead to all three of those inventory accounts, we're going to prorate that back to where it was applied. So overhead control still gets debited the 30,000. I don't know why they don't let us start with work in process, but we're going to start with cost of goods sold, and it gets credited, 40% or 12,000. And then we have work in process is 1/5 or 20%, 6,000. And finished goods was also 2/5 or 40%, so 12,000. So if they say that the variance was material, meaning it was a little more substance to it, then we would prorate based on how the overhead was applied to the inventory accounts. If you scroll down, they just want us to adjust the balances. Well, all of these inventory accounts have debit balances because they're assets. So we're crediting them. So, we applied, 6,000 credit to work in process. So what's happening to the work in process balance? It's decreasing, right? Because we credited it. So yeah, we just need to subtract. So the new balance in work in process inventory is 94,000. And then we do the same for finished goods and cost of goods sold. Those would both decrease 12,000. So their adjusted balances would both be 188,000. And then number 3 says, what if the variance is the opposite sign calculated in requirement 1? So basically it's saying, what if this was flipped? So our actual was 500,000 and our applied was 470. Okay. Well, if that were the case, then obviously we would have under applied. Okay. So it's really just a flip of that original variance. So if actual is greater than applied, that means it's under applied, and we're going to debit that to cost of goods sold and credit the overhead control. Okay. So it's just a reversal of what we did if it was over applied. And then same with your variance if it was a material variance. Immaterial, you just charge it to cost of goods sold. If it's material, you would do the same thing that we just did. So here, cost of goods sold would get debited 12,000. Work in process would get debited 6,000. Finished goods debited 12,000. And then your overhead control is still credited the 30,000. So we dealt with variances in managerial accounting. Here, the differences we're looking at with when it's material that you would prorate it out to the different inventory accounts. Okay, and it's a nice review. And I think I put that in your notes, like the difference between over and under applied, so you can always refer back to that. It never hurts to have the T account, showing actual left, applied right as well. Any questions on that? That's good. Okay. Well, we will move on to the next one. Okay, from here on out, we're moving into a little more depth in Chapter 4. So here we're looking at where we may have other things driving overhead beyond just direct labor, okay? So we haven't quite got into, right now we're looking at consumption ratios. We're kind of edging into activity-based costing. So here what we're looking at is that we have different activities that are all part of overhead. So beyond just direct labor, we have machine hours, or the number of setups that it takes on a machine. We have the testing hours for each part. We have the number of purchase orders. So we have these different activities, okay? So we would use these consumption ratios basically when different products consume different proportions of these activities, okay? So you can tell the difference between part X12 and part YK7. You know, they use different percentages or ratios of labor. They use different percentages of machine hours, setups, testing, all of that. So if we just based it on direct labor, it may not be very accurate. So we want to take into consideration some other activities to figure out a better applied overhead. Okay. If these parts only had, you know, one process or something, we may not have to do this. But since they're so different in their consumptions, we may need to look at this. So this first one, we don't even have to do too much. We're looking at the activity consumption ratios for each product, though. So it's not too bad. The first overhead activity that we have is machining, and it wants us to do the consumption ratios and choose the activity driver. Well, if I look up here, activity driver is going to be machine hours for machining. So I can choose machine hours. And to figure out consumption ratios, you're truly just going to take percentages. So machine hours for part X12, 50,000 divided by the total 350,000. That's how you're getting those consumption ratios, okay? So machining part X12 would be 50,000 divided by the total 350,000. And then they want us to round to 2 decimals. So what's the consumption level there for ratio?
You have the 0.14, or are we putting it in 20%?
Yeah, you'll put it in 0.14. Very good. Yeah, to 2 decimals, so 0.14 or 14%. And then you can calculate part YK7 as well, but you should get 0.86. Okay, 0.86. And that's what we would do at the next. So for setups, we would go off of number of setups. Activity driver would be the number of setups. And again, for part X12, it'd be 40 divided by 120. So what's my consumption ratio there? 0.33, very good. So again, part YK7 would be 0.67. And we do the same for inspecting products. That's going to be based on activity driver of testing hours. So 1,000 divided by 10,000, well, that's pretty easy, right? That's just 0.1. We can do that one. So then the second part would be 0.9. I like it when they give us easy ones, right? And then the last one, purchasing activity driver, is going to be number of purchase orders. Purchase orders. So 500 divided by 4,000. Very good. So 0.13. And then on part YK7, I noticed it will take either, if you actually do 3,500 divided by 4,000, it rounds up to 0.88. But that puts you over 100%. So I would do 0.87. Either way, it'll take your answer. To me, I wouldn't go beyond 100% since it's a ratio. I'd probably be wiser to do 13.5 and 87.5 would be closer, but they only wanted 2 decimals, so we'll go with it. So we would actually calculate overhead based on these consumption ratios instead. We're not doing it in this one, but you can kind of see if we look at the consumption ratios, part X or part YK7 uses a lot more of all those activities than part X12 does. So it should have a much higher overhead application. Well, on part 2, it just wants us to calculate the consumption ratios for direct labor hours. Well, here that would be, what, 30,000 divided by 100,000. So really just 0.3. So 0.3 for part X, whoops, X12, and then YK7 would be 0.7. So when you look at that, if we were going to apply overhead based on direct labor alone, would it be accurate, given what you see up here? Does part YK7 really only consume 70% of activity? No, it's much higher, right? So when we look at this, it kind of starts to make sense why we might need to use a different approach. Because under this method, we're applying 30% of overhead to X12, when setups are the only area that it's around the 30%. Everything else is much lower. So if we applied based on direct labor, which product is under-costed? The YK7. Very good. YK7 is not getting enough of its share of overhead. And so we're actually going to undercost it, which means X12 is going to be overcost, which could impact our selling or margins. You know, it throws everything off. Okay. So on number 3, when I said, would this remove the cost distortion of a plant wide rate, what they're talking about is breaking it down by consumption ratios. And yeah, it would, right? If we broke it down by activity, we would have much more accurate application of overhead. Okay. So it's kind of giving you a preview looking at why we might use activity-based costing. Okay. Are there any questions on that one? All right. We can check our work and move on to the next one. So that segues us right in to activity-based product costing. Okay. So the whole point of doing activity-based product costing is to get a more accurate product cost. More specifically, to get a more accurate overhead cost. Okay. So we're going to assign a cost to activities like what we just did with those consumption ratios. And then once we assign a cost to an activity, we'll assign those activity costs to the product. Okay. So like I said, it's more math, but it's not really hard. It's just a lot more math. So more time consuming. Okay. So it says Robert's company produces 2 weed eaters, basic and advanced. The company has 4 activities: machining, engineering, receiving, and inspection. Information on these activities and their drivers are given below. So we see the basic, advanced, and total, kind of what we just saw. Units produced, they give us our prime cost, and then machining, engineering, receiving, and inspection. Excuse me. If you scroll down, they also give us our overhead costs for each area: machining, engineering, receiving, and inspecting. So the first thing is pretty easy. It just wants us to calculate the activity rates. So all you're doing here is taking your total overhead cost for like machining and dividing it by your total activity of machine hours. So you're taking the activity divided by the activity driver. Okay. So we're just getting a cost per driver. So again, for the first one, the activity rates, machining, should be what? 6 million divided by 600,000. So we're taking total overhead divided by total machine hours. So what's my activity rate for machining? 10. Very good. So machining costs $10 per machine hour for overhead only. Engineering, we take what? 2 million divided by 4,000. So what's the engineering rate? 500. Perfect. So 2 million divided by 4,000. Receiving, $560,000 a cost divided by 1,600 orders. Very good. 350 per order. And then we have inspection rate, 360,000 divided by 2,400 inspecting hours. 150, perfect. So once we calculate those activity rates, we can then look at applying overhead based on per activity. So how many machining hours do we use for the basic? Yeah, and then we're going to add that to the next. So again, it gets a little lengthy to add up the unit cost, but it's not that bad. Okay, so when it says calculate the unit cost using the activity rates, okay, I am going to do basic first. Well, they want the unit cost, okay? So, well, let's look at overhead first. So we know we have 100,000 hours of machining. And I'm just going off of the basic that they gave me. And that would be at $10 an hour. So that's machining overhead. And then I have engineering. We have 400 engineering hours times a rate of 500 per hour. Plus, let's see, we have 400 receiving orders times 350 per order. Plus, last but not least, we have 800 inspection hours times 150 per hour. Okay, so that's all of our overhead. So again, a little lengthy. Okay. Okay. So that would be total overhead. And honestly, they're going to ask us to calculate overhead cost per unit. So it's not a bad idea to go ahead and calculate what your total overhead is. I guess we could do that first, even though it, puts it second. It makes more sense while we have it up here. So what is this? What is just your total overhead? Not per unit, but just your total overhead. I didn't even calculate that yet. What did I hear?
1,460,000.
Perfect. Yeah, you got it. 1,460,000 in total overhead. Okay. So on part 2, like down here, it's going to ask us per unit. Well, they told us how many units. We produced 100,000 basic units. So to get our cost of overhead per unit, you would just divide that by 100,000 units. So our overhead per unit on just the basic is what, $14.60? Okay. Well, they also wanted us to calculate the total unit cost. Well, they give us the prime cost. So I could truly just take my prime cost of $8 million plus my overhead of 1,460,000 and divide that by 100,000 to get my total unit cost. Okay. Anyone able to calculate that one?
$94.60.
Very good, $94.60. And of that, again, $14.60 is our overhead. Okay. Again, a lot of math. Any questions on that, how we got to that? You're just taking all of those different rates and plugging in the actual usage under basic. And we're able to get both a unit cost and an overhead cost per unit. Okay. To save time, so we can get through the rest, I think we still have time, but just to save time, we would do the same for advanced. I'm going to give you those numbers so I don't have to calculate all of them. So advanced would be $124.87 for the unit, 124.87. And the overhead would be 24.87. So again, under activity-based costing, you're going to get more accurate product costs. And again, if we use a program like Excel, these calculations are much faster because you can just use cell references and plug it all in, or some other program. You know, and here when you're writing it all out, it's kind of time-consuming. But again, it will give you a much more accurate product cost because you're, you know, actually assigning the right overhead to the right product. Okay. Number 3 at the bottom, it said if consumption ratios instead of activity rates were used to assign costs instead of activity rates, said that twice, I guess, show the cost assignment for the inspection activity. So all it's looking at there is if I scroll back up and look at inspection, well, I would look at my percentages there. Well, it's not letting me click off of that. There we go. So I would look at inspection and do the thing I did on the last example. So I would take 800 divided by 2,400. And then that would be the basic. And for advanced, I'd take 1,600 divided by 2,400. Or if you broke it down into a fraction, because the decimal is a long one, it'd be 1/3 and 2/3. Okay, 800 over 2,400 is 1/3. So basic uses 1/3 of the inspection hours, advanced uses 2/3. So when you're calculating the cost assignment, you would just take the total cost of inspection, 360,000, and multiply by 1/3 for the basic, and 2/3 for the advanced. So what would basic get assigned? 120,000, good. And then advanced, 240,000, good. And if you were to look back at your calculations when you did the activity-based costing, those were the actual costs assigned. We just did it in a different manner. Instead of doing the consumption ratios, we did it as the activity-based, but you get the same costs. You're just looking at it a little different way. Okay. So again, that's activity-based costing, a little time-consuming in the calculations, but a much better product cost. Any questions on that one? All right. Let's move on then, right? Okay, so this next one we're kind of switching gears and going back where we kind of started a little bit. We're going to look at predetermined overhead rate, applied overhead, and unit costs. So here we have Ripley Incorporated cost products using a normal costing system. The following data are available for last year. So they show our budgeted overhead, machine hours, and direct labor hours, and then our actual, including prime costs and number of units. And it tells us overhead is applied on the basis of direct labor hours. Well, it wants to know what the predetermined overhead rate is. So again, to calculate predetermined overhead rate, we're going to take our estimated or budgeted overhead of 285,600 and divide it by our direct labor hours estimated 10,200. So what is the predetermined overhead rate per direct labor hour? Very good, $28. Okay. This one seems so much more simple now, right? And then it says, what was the applied overhead for last year? Well, $28 per direct labor hour, and we would have applied that to the actual labor hours of 99.30. So all you're doing is taking actual hours of 9,930 times $28 per direct labor hour. So what's the applied overhead?
$278,040.
Very good, $278.40. So again, it kind of goes back to, we're going to have an actual and an applied. Okay. We'll have our overhead control, and we applied $278.40. And then if I look at my actual, the actual overhead was $285,000. So did we over or under apply? Under, good. So since our actual was higher than our applied, we didn't apply enough overhead, so we under applied overhead. And by how much?
6,960.
Very good, 6,960. We'll just subtract to get the difference. So again, on the left is our actual, and then over here on the right is applied. Okay. On number 4, it just asks what the total cost per unit produced is. Well, we always take prime plus overhead. So our prime costs were $1,050,000. And then we're going to add in our applied overhead, $278,040. So that was our total product cost. And then to get a cost per unit, divide by 150,000 units. So what is my cost per unit? And they want it out to 4 decimals.
8.85.
Very good, $8.8536. Okay. So again, we took our prime plus our applied overhead, because that's how much got charged to the product itself, and divided it by the total number of units. So our total cost per unit is 8.8536. Any questions on that one? Lots of different numbers, right? Just figuring out which number to plug in. All right. You guys sure you don't have any questions yet? That's good. You're not just holding back. Okay, we'll move on. Just making sure, you know. Okay, so this last one's kind of long. It's back looking at activity drivers and activity-based costing. So here we have Zero Company has identified the following overhead activities, costs, and activity drivers. So we have 4 different activities. Number of setups is driving, setting up equipment. They give our expected costs. So those are our overhead costs here. These are our overhead costs. And then the capacity. Okay. And then we produce 2 models of dishwashers, and they have the following expected prime costs and activity demands. So for Model A and Model B, they give us materials and labor, units completed, direct labor hours, and then they give us our activities. So number of setups, number of orders, machine hours, receiving hours. It says the company's normal activity is 8,000 direct labor hours. So we want to determine the unit cost for each model using direct labor hours to apply overhead. Okay. So there we would actually need to calculate an overhead rate first. Okay. So that one, number 1, is pretty easy. We're really doing what we just did on the last one. So we need to calculate a predetermined overhead rate. And then from there, we can calculate our unit cost. Well, the first thing we need to do is figure out what our total overhead was, right? They don't give us all of that, so we have to do some calculations. So again, this is our overhead up here, these expected activity costs. So we would add all of those up to get total overhead, okay? So what is our total overhead? Whenever you guys get it. Do what? Yeah, perfect. Yeah, $2,080,000. Okay. So we know to calculate predetermined overhead rate, we take our estimated overhead divided by our estimated driver, which in this case is labor hours, and they tell us the company's normal activity is 8,000 direct labor hours. So to calculate our overhead rate, we're going to take that 2,080,000 and divide by the 8,000 labor hours. Okay. So just like what we've been doing, we just had to calculate the overhead first. So what do you get as the predetermined activity rate? 260, perfect. So that's $260 per direct labor hour. Okay. So when we determine the unit cost using direct labor hours to apply overhead, that's just, you know, pretty standard. We're going to take direct materials plus direct labor, which are prime costs, plus that predetermined overhead based on direct labor hours. So for model A, that would be what? Direct materials are $600,000 plus labor of $480,000 plus $260 times my direct labor hours of 6,000. We're going to do all of that, which this should be what, 1,560,000. Okay. So when we add all that up, we should get what, 2,640,000 divided by, we made 16,000 units. So total cost divided by 16,000 units. So model A costs $165 per unit using a predetermined activity rate to apply overhead. Okay. You would do the exact same thing under model B. You would take, in this case, 800,000 of direct materials. That was 800,000 of direct materials plus 480,000 direct labor plus 260 times 2,000 hours of labor would give us $1,800,000 in total cost divided by 8,000 units. So model B would be 225. Okay, so some math, but not too bad. Those would be our unit costs, again, using a predetermined overhead rate and applying based on direct labor. Okay, so again, that's the kind of stuff we did in managerial accounting. The second one is the long one, because then it says determine the unit cost for each model using the 4 activity drivers. So we have to use this data given and calculate. First, we have to calculate activity rates, and then we have to apply those activity rates to each model to calculate unit costs. So a little more math, right? A lot more fun. No? You guys look super excited, by the way. You guys get all this down okay? Anybody? Again, that's when Excel can be your best friend. If you're comfortable with Excel, you can type it all into that and let it do all the work for you, right?
What was B, what was that? Oh, no, my God.
Did you get it? Okay. So, the first thing I want to calculate were my activity rates. So for setups, I would take 480,000 cost divided by 600 setups. And again, that's just what they gave me, the activity capacity. So cost divided by capacity. So setups will be $800 per setup. And then ordering, $360,000 of overhead divided by a capacity of 18,000. Ordering is $20 per order. And we have machining. Machining is 840,000 divided by 42,000 hours. So machining is also $20 per machine hour. Receiving is 400,000 divided by 10,000 receiving hours. So it is $40 per receiving hour. Okay. So we have to calculate the activity rates. Then once again, it's just plugging them all in, right? So for model A, to calculate the total cost, well, we have direct materials of 600,000. Then we have direct labor of 480. And then we would want to calculate our overheads. So we would have setups, $800 times, 400 setups. Okay. We've got that stuff down here. And then for ordering, we have $20 per order, and Model A has 6,000 orders, so 120,000. Then we have machining, $20 per machine hour, 24,000 hours, so 480,000. Receiving, $40 per hour, and it used 3,000 hours, so 120,000. My arm's getting tired. Yours probably are too, right? So again, I would take materials plus labor plus setups plus ordering plus machining plus receiving. Total cost $2,120,000. And then we produced 16,000 units. So divide that by 16,000 units. And lo and behold, we end up with a unit cost of $132.50. $132.50. So that's quite different, isn't it? Okay. So if we assigned based on only direct labor, Model A was $165 unit cost. When we use these cost drivers, activity drivers, Model A goes to $132.50. Okay. So you can see that you're getting a much different cost. Yeah, that's why I wanted to do this one where you do both. You can see the difference in activity-based costing. Yeah, it's a pain, right, to do all the math. But again, in the real world, you wouldn't have to do it all by hand. We just torture you in college, right? You get a much more accurate cost. And then you could go through and do the whole same thing for Model B to save all of our arms. I'll give you the answer. But you would recalculate, your total cost would be $2,320,000 divided by 8,000. And you would get a Model B unit cost of $290.
What did you say that total was again?
Oh, the total cost was $2,320,000.
Divided by 8,000.
Uh-huh. So again, the whole point when number 3, what method produces the more accurate cost assignment? Well, that's going to be your activity-based or your, the 4 activity drivers. Because again, you're looking at something beyond just direct labor. So we have all these different overhead costs. There's overhead costs for setups, ordering, machining, and receiving. All 4 of those activities incur overhead costs. So if we break it down and we apply based on those activities, you're going to have a much more accurate product cost. Okay? So your applied overhead will be much more accurate. So you should see less variances when you use activity-based costing, since you are using a better system. Okay? So you will see most manufacturing companies are going to use activity-based costing, but again, they're going to have the programs to calculate it much quicker than what we just did. But even by hand, it's not like it's that bad, it's just a little time consuming. But in the workplace, much more important. If we only had, one activity, then obviously we can use a predetermined overhead rate. But when you have several different overhead costs, it really does make a difference. Any questions on any of that? We actually rocked through it pretty quickly. So I guess because we skipped doing the math on Model B. All right. Okay, well, if there's no questions, we are finished. So feel free